All right, Mix 1041, MixTV.tv. We're joined by our friends from Alon Planning Partners. We have Jay Hagee and Tanner Horsemeyer here in the studio. So great to see you all.
Glad to be here, Bridget. How are you doing?
Doing well. So we're going to be talking about something today that we're seeing a lot of, market volatility. So
you could say that. Yeah,
yes.
You could say that.
Yes.
And there's a lot of folks probably listening, feeling maybe some certain way about their accounts and what's going on in the market. Obviously, there's been a tariff conversation, people's accounts in their 401ks and their 403bs and their IRAs, retirement accounts are going haywire. And so the conversation is around volatility, right? What's going on? Where are we at right now? Where are we headed? And we want to really start the conversation on making sure that people understand that this is a part of the journey. But depending on how you have your plan built out, it doesn't necessarily have to be in a way where you are feeling the same stresses that you would have felt had you not had a plan altogether.
That's right. And we help a lot of people that are pre-retiree to retirees. And so they're either stepping into this season for the first time or they're in a season to where they're not earning a paycheck anymore.
Yeah.
And so when you see a lot of market volatility and the way you're earning your living is coming from a bucket that is also going down and you're not even drawing from it, that's a problem, right? And so people are getting a little scared because it's like, man, well, if I'm losing money in the stock market and I'm withdrawing, that's what we call a sequence of return risk. And you have to be aware of it. So you have to have a strategy and have to have a plan because you're no longer accumulating and putting money into the 401k when you're in retirement, but you're taking money out.
Yeah.
And so this volatility, you have to make sure that you're positioned well.
Yeah.
Number one, you have to have a good investment strategy that you know that you're positioned, that you have diversification, that you are, when I tell folks, when you're in quicksand, what do they tell you to do, right? You don't get like a pencil and dive down like this.
Spread out.
You try to spread out.
Yeah.
If you're going to get out of quicksand, you got to spread out and lay your whole body across a surface area so that way you can actually get moving again. Yeah. And so we make sure that the folks that are nearing or in retirement have proper diversification. Well, what's proper diversification mean? It's 5 asset classes.
That's right. Yeah, you're looking at cash, stocks, bonds, right? You're looking at commodities, and even some folks have that real estate, right? But we've had people come into our firm and they're like, hey, we're well diversified. We've got, thousands of stocks and, hundreds of mutual funds, and we've got a great balance to our portfolio. Problem is we will do a deeper dive, and even though they've got a lot of those positions, everything's kind of headed the same direction at the same time, right? We call that being overly correlated. And so if you've got everything heading the same direction at the same time, you're really not diversified
That's
at
exactly
all.
Right.
And so the thing that we're really starting to see is, and the need is that people just understand actually what's going on under the hood of their car, right? Under the hood of their portfolio, because now is the time where sequence of return risk really begins to take root. And this is a dynamic where we kind of call it the Goldilocks zone. 7 years before your retirement and 7 to 10 years after your retirement is kind of that window where we need to make sure that you are locked in, that you've got a laser accurate pinpoint on your dynamic, because when you're in your 20s and 30s, you can kind of ride out the volatility a lot more than someone that's in their late 50s or 60s and 70s, because your time horizon is so much lower than when you're in your younger years.
And here's what you want to do. You want to find out soon. You want to find out how you're diversified soon. That's why we have a lot of secondary appointments with folks who may have a financial advisor, or they may have someone that they've worked with, or maybe they have a 401k at work, but they truly don't know what's my diversification level. We see a lot of that. And so Warren Buffett says it really funny, I think. He says that nobody knows who's skinny dip until the tide goes out, right? And so like when the ocean tide's in and everybody's swimming, everybody's having a party, it's great, but then we really find out when the tide goes out. So when the markets go down, who's got swim shorts on and who don't, right? and so we don't want to wait till the tide goes out to find out if you're skinny dipping. We want to make sure that we're covered right now. So that way when the tide goes out, you have a good diversified plan.
Yeah.
And that's what we help folks strategize. So one, you want to have a good diversification plan. The second thing is for your income plan. You want to have a bucket strategy is what we call it.
Yeah.
You want to have a short-term bucket, a mid-term bucket, and a long-term bucket. So if I'm going to take risk in any of my accounts, like that's heavy, that I'm going to be skinny dipping, it needs to be in my long-term account. So it's the last thing I'm trying to get to, right? Yeah. I need to have short and mid-term diversification within my account so that all this volatility right now that I'm feeling, it's not going to affect my short term because I've got time to wait for this to get better, right? The tariffs that we're feeling, the taxes on other countries and things like this. So you need to make sure that you have a good diversification strategy with your investments and you have a good income plan. And so that's what we offer when people come in.
Yeah, it unfortunately, the days of old where most people just had a pension and their Social Security and that's all they had to, worry about. Those days for the vast majority of folks is gone, right? And so it takes a lot more intentional planning and intentional navigation. And we talk about it all the time that those that fail to plan, right? We all know it, they plan to fail. And we do unfortunately see that from a retirement standpoint. But those that are like, hey, we are just wanting to inquire and figure out, are we doing the best? Is the engine of my car operating the way that it should? And we're able to really walk alongside those folks and give them the answers that they need.
And ultimately, Bridget, you don't have to panic.
Yeah.
You don't have to panic if you've got a good diversification strategy. You may have certain buckets that are taking more risk and that are taking on water so much in the boat, but then you've got other strategies that are keeping you afloat. So you need to make sure you've got a good strategy, and if you do, you don't have to panic.
Yeah.
So we offer that. If you are out there listening and you're seeing all this market volatility, maybe you have a 401k and IRA and you don't truly know how you're correlated, like Tanner said, or you don't know how you're diversified, or you don't have an income strategy that may be protecting you, come and see us. We would love to dig through what's going on in your portfolio and your income plan and derive a plan that maybe help you a little bit more diversification in your life.
I was going to say one thing is, it's kind of corny. It definitely is corny, but we talk about wanting to build what are called SWAN plans, right?
That's right.
Sleep well at night. And it's funny because during all this volatility that we've been seeing, I would say kind of one of the testaments is we're not getting many phone calls at all with people that are panicked because we do so much planning on the front end that during these times of confusion downturn and volatility, this has been a part of the dynamic that we're building in from the front end so that when people go through it, there's not as much of that stress and they're not white knuckling their phone, looking at their accounts go crazy because we positioned it properly on the front end.
So 2 things you can do. Call us, 423-315-1441, or go to allonplanning.com. That's ALLON planning.com. There are a lot of resources we provided there. We've got YouTube videos. We've got full TV shows. We have educational events coming up. If you want to come meet us in person, they're right there on the website for you to check out, or schedule an appointment right from the website. But give us a call, 423-315-1441. We would be glad to go over what's happening in the markets right now, what's happening in your scenario, and see if we can't put you in a better spot to give you more peace through this volatility.
That is Allon Planning Partners, our friends Jay Hagee and Tanner Horstmeyer. Thanks for coming in today. We appreciate it.
Yeah, thanks for having us.
Investment advisory services are offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.